Thank you all for coming. I didn't know really too much what to expect when Matt had told me about this event. I was just excited about the rest of the people who were going to be here. And I think that the intelligence level of the conversations that I've witnessed have been fantastic. So it's great to be around here. I'm always constantly impressed by DC and the minds that are in DC. And I've been myself in the last 6 months spending a lot of time in Puerto Rico. I had not spent any time really before then getting to know the island and getting to know the people of the island, really falling in love with the people. And I have been a cypherpunk since the 90s. I worked in the financial systems, SocGen, for many years. I consider myself a subversive financial technologist. And along my travels, I've gotten to know some pretty interesting people. And I'm sitting with a couple of them right now. So I would like to introduce the panel that we have in front of us. Daniel Heller, he is the former executive director for the IMF. He currently is consulting for the World Bank on blockchain and also is working in an organization called Bitlumens, a gridded energy company that will be using their technology in Guatemala to provide off-grid solutions for power. To my right is Dan Doney. Dan is the former Chief Innovation Officer of the Defense Intelligence Agency. During a period which he had early on solved an identity solution, a problem that the country was facing through a technological solution. He was appointed to this position, and it was tasked with blockchain, understanding Bitcoin, what was going on. During that exploration, he decided that there was a big gaping hole in what was the oncoming issue with securities and how tokenized securities were going to work, and he founded an organization called Securrency. And then David on the end is joining us now as well. I've got to know David in through Puerto Rico, and just I'm really excited about what he and his organization, his sister, are working on and helping build out with Act 20 and 22 and why that's important. So really today I wanted to talk about securities, past, present in Puerto Rico. So I wanted to start a little bit on the regulation side, and from an IMF point of view, from a world standards. Daniel, the current level of regulation worldwide, what's your perception on where we're going, how these tokenized security markets will interact with each other, and where do you see the next 5 years in how these the onslaught of the tokens that we'll have, ultimately, will this be beneficial to a lot of these satellite markets and the secondary markets? How did we get here? What's your opinion about where we're at now?
Okay, thank you, Timothy. You should come to DC more often if you like it so much, so you're always welcome. It's great to be here. To answer your question, I think I want to answer in two parts. The first one is we have to talk a little bit about infrastructure, first how we move securities, and the other one is about regulation. Now, how are securities regulated? If we look at the current system of how securities are handled in the financial system, we see a very fragmented picture. For instance, if you sell me a bond that you hold of an American company, I could buy it in Switzerland. The way it would work is that your bond is held centrally somewhere in New York, and then the ownership of this security is transferred to me in Switzerland. And this is done via a message to the Swiss Central Securities Depository, where it says now it's owned by Daniel Heller, right? So there's no physical transfer of the security. There's also no electronic transfer. The original digital security is still in DC. There's just a message that goes to Switzerland. So this is where, and then on the same we have with money, right? That I have to pay you, my money goes from my account to a correspondent bank in the US and so on. So that the long and short of this story is it's very complicated, right? And a lot of messaging and a lot of reconciliation. So, and that's not good. And blockchain is great here, right? If we have tokenized securities, we can trade on satellite exchanges, wherever, and then ownership is just transferred on the blockchain. Right? We don't have to go through all this complicated stuff anymore. So that's why I think, if you ask me 5 years down the road, I think technology will bring us to a much simpler financial infrastructure. Now, regulation, I think securities regulation is mostly about investor protection, right? It's about debt, it's debt instruments, and the punchline of regulation is that investors have to be protected, and everything around it has this aim. So there are requirements on the issuer, there is auditability, you need prospectus, and so on. And but the problem is now we have 180 different securities regulations that are not compatible. And we see this in the ICO space. In the US, I think the regulator sees these ICOs usually as securities. In other countries, like in Malta, these are not securities. Switzerland is kind of in between. So what we need there is some convergence of regulation to the extent possible. But I think what we should not lose is this aspect of investor protection. Right? It makes sense that if I give money to someone, that the other side needs to meet some requirements.
And I'm going to get back to a little bit about that protection a little bit later. But the first thing, to address that, Dan, you've been working on regulation technology to kind of allow that on a global basis. I'm going to jump directly into asking, do you believe that we may one day have more of a global system of participants that would allow this type of system to work better together? I mean, we're seeing a lot of this drain out of our own country. Myself as a technologist right now, if I'm going to sell, international securities, if we're selling things on the internet, if we're selling digital assets on the internet, we find ourselves having to look in these other markets now. I am a proud American. I'd like to be creating my products here, but ultimately, I don't have the guidelines to be able to do that. It would be great to see some sort of world kind of ideas behind what this can look like. Do you see that as being a possibility, or where do you see us in this next 5 years in getting to better regulation globally?
Yeah, I do see it as a possibility. I think it's a probability, though 5 years may be optimistic in terms of when we'll get here. Look, there's a couple fundamentally new paradigm-changing capabilities that exist that really will help us get to that point. The first, foundationally, blockchain is a key enabler of global commerce. So it has global reach. It has the mechanisms by which you can do efficient transfers of value anywhere in the world, really in a fairly friction-free way. In the absence of this, you had a patchwork of different entities who are moving value, subject each of them to different rules, and that made the case that Daniel mentioned earlier, where in Switzerland, if you want to own a US bond, you're going through a few intermediaries. Someone in New York is making really good money off of your money. Someone in Zurich is making really good money off of your money. And what that means is you're not efficiently matching capital to opportunity. In the absence of being able to match capital to opportunity, you fundamentally undermine productivity. And here's the little secret. There's a great deal of opportunity in the developing world. We cannot efficiently match capital to those particular opportunities. This undermines everyone's interest. Look, the places where in our history we've managed to efficiently, and this is one of the reasons why the United States has been a worldwide economic leader, was largely our systems of matching capital to opportunity. Silicon Valley is a perfect example of this. It's a place where money can find good ideas, ideas can go to small companies, and small companies can grow to big companies. And the whole system refreshes itself. If you're a small business owner in Puerto Rico or in Mozambique, your access to capital to grow your ideas, to hire your workforce, to bring on board new capabilities that'll help you grow is nil. And so as a result, what you see is the only kind of companies that can start are companies that come in from the outside, and this leads to additional exploitation. being able to, in this new global financial services framework that we think is at hand for a few reasons that we'll go into, you're allowing sophisticated financial services to move out of the financial centers like New York and London and Singapore, all the way to all parts of the world. And this is truly paradigm changing. We have a few examples in terms of what our company has done to reach developing world farmers. And small, low-cost access to capital can fundamentally change lives and end exploitation. It's just a big deal. We think we can get there. Blockchain's a key enabler. Global identity models, where we can proof folks' identity at scale, is another key component.
I really like the idea of a global financial framework, and hopefully that'll be something that regulators here can adhere to as we're really going through. I mean, it's been proven the kids like the technology. I don't think the technology is going anywhere, and enabling us to be able to raise for these companies based on the technology is important. So in Puerto Rico right now, the things that David's working on, Act 20 and 22. Now, a lot of people get slammed on the fact that are people just going as a tax haven? And I completely do not believe that that is the case. I believe that the model was set up and is set up to encourage the businesses that need to be started there. Give them reason to go there, to start, to create industry there. David, if you could, just a little bit about what it takes to incorporate in Puerto Rico under 2022, what that time frame looks like, and how many companies are you seeing right now that are actually going through that incorporation?
A lot more since in the last few months, actually, especially a lot of folks in the crypto space, just to answer that last question. But the Act 2022 laws, I think, have the potential to really build that bridge between kind of the disparity of of economic opportunity in Puerto Rico, where I think there can be a really good fusion of new businesses coming in that are obviously creating jobs as well, but also being able to kind of invest in the innovation process that's going to be necessary for rebuilding and reimagining the island and retooling the island. And I think that as they are in place, it's my opinion that that if you leveraged correctly, or if on a shared system of accountability with folks that are relocating, then we can actually leverage the blockchain to have this radically transparent fusion of capital and human capital and financial resources. What it takes to become, and I think that's what it takes to become an Act 2022 company. And Act 20, as I mentioned in the previous talk, is for entities, and 22 is for individuals or individual investors. And there's more incentives on the 20 side, in my opinion, because you don't get taxed on, you have exemption from capital gains and dividends, whereas on Act 20, you are getting, and income tax, whereas it's only income tax if you're an Act 22 individual. Now, that being said, is a rumor, but I haven't confirmed this, but apparently there was upwards of between 4,000 and 5,000 applicants in like this new year, especially since the wave of folks interested in the crypto space are going to be going to Puerto Rico. I think that might be a majority of 22-based companies, but there is a minimum. The cool thing about both of these is that in Act 22, you have a minimum requirement of donating. It's pretty low. It's like $5,000 to a nonprofit organization, but you have to bear in mind that this legislation was put into place in 2012 and modified again a year ago. And this is all pre-Hurricane Maria. So our corporate tax rate used to be 6%, which was still a really good deal, lowered to 4%. So one of the tangible ways I see of how to maybe work with companies relocating is if you can commit to the 6% in the sense that you'll give 2% into an impact investment vehicle, that you can have clear results on where that's going, and if you care about energy more than waste, or you care about buildings more or farming, then those values can be considered into this blended capital approach. And I think that sends a good, honest signal to the people in Puerto Rico, but also it allows the original laws to still be abided by, but still gives this creative opportunity where now the money that is going in, that is being taxed, that little that is being taxed, some of that can be in a transparent marketplace, if you will, for projects on the island.
Great.
Mm-hmm.
So one of the things I kind of wanted to step back and talk about was, we've kind of gone through this this movement before, the age of information, brought on electronic trading markets, and that was incredible during the late 80s, early 90s. That was important, and not everyone knows kind of the history of these markets and where to have markets. You know, looking back literally at the Waldy Street, that trading kind of began here in Amsterdam, the different markets that occurred. That many people don't recognize that a lot of these markets were localized. You know, we had markets in Kansas City, and you had your markets in Chicago. There were markets all over the country. I was starting to do a little bit of research about Puerto Rico and where the markets were in Puerto Rico, and they seemed to be non-existent. So looking at how a company actually maintains momentum, is able to earn capital, and have fungibility and exchangeability, does not seem to exist in Puerto Rico. In fact, the only thing I really found was that there's a Puerto Rican stock index of some of the top Puerto Rican companies that are trading on our larger markets. So, you know, one of the things that I believe this type of technology can bring is this larger market, wider reach through these new technologies to organizations specifically geared at Act 20. So if we were to be able to create a market and be able to have a Puerto Rican market of these companies that had all gone through Act 20, and me personally, that's something I thought would potentially be interesting. You know, those are the type of opportunities that we're going to have now with this technology, and it's something that, you know, ideally, you know, I'd like to be working on with you, David, and seeing where that type of things can lend. Now, going back to the protection of investors, right? I hate this. You know, the protection of investors. How about we protect the entrepreneurs from the vulture capitalists that have created a society that does not encourage people to take moonshots and does not allow them to benefit in these networks that they're creating. You know, the last 20 years, the banksters have really taken off a lot of the de-risk and taken off a lot of the capital. I would love to see, Daniel, when I was 18 years old, I got my Series 7. I was not an accredited investor, nor anywhere near an accredited investor, but I was advising people on what to buy legally and where. The system that it's under, the Securities Act of 1934, 30 something, I think is absolutely antiquated. And for us, for that system, what do you see? What can we do to change the system to allow, you know, we've seen the younger generation want to participate in some of these network movements. It de-risks the entrepreneur. A lot of times it doesn't, if they're utilities, it does not devalue their own participation, but it also allows them to have, to take something off the top and be able to continue and be successful even if they leave a project or whatever it is. I know that there should be some regulation around how that looks, but you know, have you thought about any other systems that could provide protection while still allowing people who have the intelligence? I don't want this to be right now it's a class warfare. If you can only make money by having money, that system's unfair. Have you given this any thought? Do you have any opinion?
Yes, I think it's an extremely important point. And I mean, to add on your argument, I think it's legal to gamble, right, in most states. And it's clear from the beginning that you will lose on average if you gamble, right? So there is no, but it's still legal. But when it comes to investments, right, there's this whole a very elaborate legal framework that does not allow you to buy a traded financial instrument. And it's a fact that if you issue a token that is viewed to be a security in the US, and you offer it to non-accredited investors, it's you will get in trouble. You can get sentenced. I'm not sure whether you can go to jail, but it's an offense, and I think that's not right. And I think one way to solve this is with a new law that is inspired by crowdfunding legislation that is actually out there for Kickstarters and so on. That there are some rules, a cap of X million that you can raise per year. There's some disclosure requirements, some audit requirements, and I think this would really make sense to also to open up these the markets in Puerto Rico and elsewhere to people who want to invest from the US, for instance.
I just want to add a little bit to that, because I actually agree that I'm really all about the micro impact investor opportunity. I think that's why we wanted to start with the diaspora. But I actually agree that as a micro investor, you do want to be protected as well. And not protected, but you want to be reassured, right? So there's been all sorts of Kickstarter ripoffs that I think people are, and I'm sure people, they can raise their hand if they've been part of those, right? So that's one example of, non-return, like throwing your money into a hole, and that's not a clear gambling game, right? So, somewhere in where we're going from, really high, really high regulations and protections for investors to to gambling. I feel like the middle is kind of the microequity crowdsourcing. So
I fully agree.
So I completely agree with you, David. I love investor protection. I think it's a very necessary function within the marketplace. It's just investor protection based where the boundary is how much money you have. Accreditation is effectively the wrong model. So look, the law, the Securities Act came into play based on, we had the Roaring 20s, tremendous success. Everyone was getting in. Everyone was getting rich off of the Roaring 20s. Great Depression hit. The people who were good at selling those things ran out of a market. So what they started doing was pitching retirees and other folks on schemes and taking their money. And with enough old folks having all their money taken away through bad disclosures, Congress stepped in and decided they had to act. This is not unlike, if I'm honest, the ICO space, where it's estimated that 8 out of 10 offerings in the ICO space are actually bad offerings. And the reason is there's not sufficient protection in place in this way. You must disclose risks truthfully. That's part of what the normal process by which you approach the market as a Reg D offering requires you to do this. If you lie, you're accountable, but you must disclose. That piece of the law is actually very favorable. You should tell the truth. If you do this, you may be telling the truth about a high-risk opportunity. As long as you're telling the truth, you've fully disclosed risk to folks. The UK actually has a better form of the law here than we do in the United States, in that up to a certain investment amount, so my first 2,500 pounds sterling, for example, anyone can invest up to that level. And so what that does is effectively creates or enables the crowdsourcing model where everyone can participate in the upside. But if you're going to put your entire pension up, well then there ought to be more controls in place for this, for that kind of movement of wealth. And I think that's a very viable way to approach the market in new ways. We happen to have ways to enforce that within our framework, and we're hopeful that the regulations will improve. But you can't do away with investor protection. Otherwise, the world of Ponzi schemes abound.
Yeah, I don't want to be misconstrued. I definitely believe in certain of the investor protections. The one that I have an issue with is particularly the Reg D offerings, which are simply directed at accredited investors. And
I knew that about you, Timothy. I was just trying to create some sort of controversy here, brother.
Sounds good. And you know what, the A+ and CF offerings that you were referring to, Daniel, the issue that we've had there with them is the fact that the institutions don't end up getting involved. The problem with these lower offerings has been traditionally that they don't have any liquidity after they're launched into markets. So hopefully we'll see that kind of turn around, and something needs to be done. I'd love to see. You've spent some time recently with the SEC. I'd love to see a new model come out for the ICOs. Speaking of which, you mentioned a moment ago that so 8 out of 10 are likely bad. I would agree with that. We don't have yet the engineers into the space. It's so fresh, so early. But how many of those do you believe are utilities versus securities? And do you believe in the utility model? I'll direct that to you first.
Yeah, so I absolutely believe in the utility model. I just think it doesn't apply for most of what's going to the market. So really,
explain the difference between.
Yes. So the difference between the two is directly related to the Howey test. And I'm going to paraphrase here. There are really 4 key tests associated with the Howey test. But the difference is whether you're actively participating in the production of value, that is what a utility token is, or whether you're passively involved in the opportunity. which is an investment. You put your money into a thing for hope that that money grows and you take more money out. The difference between those two is it's usually pretty clear. Many people are claiming utility offerings when they in fact are or should be security offerings. The real limiting feature, or the thing that you should consider, is if you are putting your money in to increase in value without direct participation, you're almost surely engaging in a securities action. And if you're not putting your money in so that it increases in value, what are you doing? So that means that most of the good and viable offerings that come to the space will in fact be securities. The bottom line is that's not a problem. With appropriate protections within the networks themselves. Look, if we're honest, blockchain technologies are the greatest regulatory technology mankind has ever created. And let me sort of back that statement. A transparent, immutable ledger of all transactions is every regulator's dream. The fact that you can look in and see evidence of fraudulent activity, people can't cook the books, et cetera, this is a great thing from a regulatory perspective. When you can layer identities, the only problem has been anonymity and compliance aren't compatible. When you can layer identity over top of this, you have a very effective way to approach the market with securrencies and currencies and securities. And that allows for much more efficient capital formation. It's truly a different world when you get the best of what the regulators are looking for and much greater global access to finance. And that's what we see ahead.
When do you think we could expect to see any sort of guidance on these things in the United States? And when you look at states like Wyoming coming up with their own framework and the things that they've been able to do, and then you look at the possibility of territories like Puerto Rico coming up with their own. What guidance federally are we going to have and when? Any thoughts, Daniel?
It's a hard one for me, but because it's state legislation and federal legislation. But I just want to, can I push back a little on what you said? I mean, if your token is viewed as a security, then as it is now in every country where someone buys your token, you would have to issue a prospectus, tailor-made to that country. Maybe blockchain will solve that too, but for the time being, this is a nightmare. You have to give up. Like your entrepreneur in Puerto Rico would not do that. The costs are just too high for now, I think. And that's why we need a reasonable approach where within limits, with investor protection, these people can tap a global funding market.
So Daniel's point is very valid, and this is the problem with existing financial frameworks. It's the reason why you can't get global reach with good opportunity, but it's flat out wrong thanks to technology. So the things that make it possible, and this is what our company does. We're in the market to address exactly the problem that Daniel raised, which is a legit problem. It is too hard for an entrepreneur, first of all, to learn securities laws and to make sure you don't make any mistake with respect to securities laws, let alone the patchwork global securities laws. Even in the United States, securities laws are different in Florida than they are in New York. So making sure you don't trip over a line that you didn't know is an inordinately expensive thing to do, unless you have a technology which handles the differences between these. So the only secret is, if you know the jurisdiction of the holder of the tokens, and you know the jurisdiction or rules associated with the offering, it actually becomes easy to fully disclose in a straightforward way, which gives you much greater access than you've ever had before, where the tokens actually can govern themselves according to the laws for that particular jurisdiction. That's a longer story for another day, but it really does open up all sorts of new opportunities where the entrepreneur has a single place where they go, get access to capital efficiently, and where the legal frameworks are actually built into the blockchain networks.
So one of the things that we all get excited about with these tokens and the networks that are built is the opportunity to do something like this example. For me, the example of I want to buy Apple stock. I own Apple stock, and then maybe my Apple stock entitles me to an earlier place in line to purchase Apple phones. And I might be able to purchase Apple phones at a more discounted rate if I use my Apple stock to do that. I'm not able to do that currently under the law. So if all these things are securities, how do I do that? Because that's what I'm doing. Ultimately, that's I believe in that future. Where do we see this phasing out? Daniel, we'll start with you on this. If you have any thoughts and ideas on this, and globally, where does that sit? Are there any countries that I'm allowed to do that in currently? Am I allowed to? Is that existed? When can we get there?
I mean, I'm not aware of any country where this is possible, but I was never such a big fan of this example in the sense that, if I think Apple is a good company, I buy Apple stock, and then when I buy my phone, I sell some of it, and so I can participate in the upside. I can already do it today. It's maybe I will have to buy a lot of different stocks, but I at least of listed companies, I can become a shareholder of basically every listed company if I believe in it. If it's profitable, my wealth goes up too. Right? It's like with a token, it's the same. I just buy it later. I think the beauty of the token is I can buy it very early.
Yeah, and I see that, but being able to, for me, where we've come with these digital assets, where we've come with these crypto assets, is that it's opened up again the idea of what is currency. And currency is a form of communication. And being able to speak in many different forms of communications is what I think the people of the world are trying to do. So as a systems builder, being able to encourage and incentivize people that would be participatory on the early side of my network when things might not all be built out and where things might not be that great, by allowing them to have certain features that are allotted through this sort of use. I'm looking forward to it. I think it's coming, and I think there will be radical benefits to this. I also believe that you'll have an AI pay wallet that'll hold millions of these assets, and that's how we'll all live. But I'm hopeful that this is coming, and I'll take it offline and talk to you about that. But Dan, what are your thoughts on that type of example? Do you see that coming anytime soon? Do you see the ability? This is the problem that we have right now. If these things are all securities, like we're saying, then what I've just described is not legal, and I want it to be. So how do we help that?
Yeah, so if you attach to those securities the fact that the law goes with them in this framework that I mentioned, suddenly the ability to transfer shares of a company as currencies, that's what our company Securrency really is all about, is a reality. This changes, so shares of Apple is a good example because you can relate to it, but it turns out because the New York Stock Exchange has a lot of liquidity, you wouldn't. You would just trade it for dollars and off you go. But if it's a startup in Puerto Rico or a fund or developing world farmer lending pool and your share interest there, those aren't liquid. You can't take and trade those for the value that they hold unless you have a framework that actually takes that security and allows you to move it around. Here's why that's so game-changing. Now your money can be at rest. Instead of it sitting in a bank account and earning you 0.25% interest here in the US, negative interest in Europe in some cases, you can now put your money at rest in a Puerto Rican development fund, be earning interest and dividends from that fund, putting it to work, making a difference there. But when you want to use it as a currency, translating it to dollars, even though it's a private placement, you have the means to do so. That means your money goes at rest to the best opportunities that are out there, and that creates new development opportunities around the world.
So from the legal framework, is that something that the way that the system works now, or you envision it, would pass those the legal regulation here currently in the U.S.? It
does. There's some really tricky problems we'll stay away from, but in general, the practices are already established. If I own shares of a private placement and I want to redeem them, I go to my general partner. He makes a bunch of calls or she makes a bunch of calls around to find a willing buyer. It's an inefficient process. We can make that process efficient and legal, which creates the secondary markets to allow these exchanges to take place. That's certainly a piece of it. The place where it's tricky from a regulatory perspective is effectively bartering. So if I'm going, instead of going through dollars in order to get to, or pesos to get from here to there, I go direct and trade my rights to, again, a micro-lending pool in exchange for rights for a real estate pool direct, which you can do. And we can trade and engage in this barter system. The question is, how is that taxable? As a practical matter, we have a solution to that as well, but we actually see a world where currencies in their current form are actually not even that beneficial. They are their own form of friction. We certainly know that governments do exploit these things. So real asset-backed value seems to be a better way to do commerce.
Yeah, I actually had heard of a number of systems that I know that corporations trade within that corporate barter system. So that is something that is very interesting.
Yeah. And with that, I want to give our panelists a chance to have one final closing thought, especially at the end, if you have a thought to chime in with. And then with that, we'll say thank you.
I'm not really good with the regulation, but a thought that came to my mind is, and maybe you guys can nod an answer to this or not, but if I invest in Apple's brand, is that separate from me investing in Apple as a company? Because you have like loyalty, you can create a loyalty tokenization model around that where it's, because you can argue that the brand does affect the stock price, but it's technically not the company, and the brands affect the advertising that to build up that brand. So I think there's a lot of opportunity to invest in companies' brands and then maybe leverage that for, for creating more value. Yeah.
So gentlemen, thank you so much for taking us through the complex maze of the reality of regulation and the hopeful sky above. Please give these guys a hand.
Thank you guys.